Finally, all good things are three. Welcome back to part 3 of our Industrial Tech Quarterly Review of 2025 and Outlook to 2026. In this part, we take a look at major M&A trends in the industrial automation and industrial software environment in 2025, as well as taking a look ahead and discuss how the technological trends that we discussed in the first two parts will impact M&A activities in 2026 and probably beyond.
It didn't surprise me, the sale of the ThingWorx and the IIoT and the connectivity with Gateway, right? Businesses having a focus on lifecycle management products, application lifecycle management, product lifecycle management. So kind of connectivity and IIoT was not fitting into their strategy. That was something that was foreseen. The thing that really surprises me, and again, same as GE with their prophecy business, right? MES, Cara, Historian, was that they sold those businesses to private equity companies.
Transforming industries.
You want to exploit opportunities in the current industrial automation and software M&A dynamics? Reach out to me and let's explore together. Now, let's jump into discussion on the major M&A trends in industrial tech of 2025 and our assumptions and hypotheses for 2026. Hi Sebastian, welcome back to the third part of our Industrial Tech Quarterly Review. I think we already mentioned it in the end of the second episode. Now it's about M&A and M&A trends we saw in 2025 and also giving a little bit an outlook on 2026. And I think we'll see a lot of topics we addressed in the first two parts, right, on a technology basis, also reflected in M&A, right, in specific transactions and the logic behind that, which, yeah, I should think should resonate. So yeah. So maybe let's start with that. I prepared a little bit, and maybe now we turn around, right? So I'm going into the details, and now you have the fun asking me questions, and let's try it that way around.
Absolutely, Tim. This is your field of expertise. I have some insights from my analyst activity, but now it's your stage right now, right? So,
but as I said, yeah, like feel free and compliment, especially going into details. So I was looking at it not from a technical or functional point of view, but from, let's say, underlying drivers and key trends that shaped the industrial tech market in 2025. And I came up with overall 5 topics in how I would have broken it down. And the first one, and I don't want to go too deep into it, as we addressed it already a little bit in the last episodes, but I think it's not M&A in the core, but about partnerships and ecosystem development. I think we discussed it already in the industrial AI part, and I think this is something that will definitely shape the future of the whole landscape. Yeah, especially around the developments in industrial software, industrial AI. I think we touched it already. Each of the large automation vendors, you found announcements on cooperations, partnerships with Microsoft, with AWS. I think almost all of them with both, because you need that flexibility, probably in different areas with each of them. And also, like what we also discussed in the centerpiece of that with NVIDIA as a key enabler for all the AI models. But interestingly, not only the large vendors. If you looked at the announcements around the Hanover Fair last year, especially on Microsoft, there was a lot of cooperations with mid-sized companies, with startup companies in different fields where you see also the logic in the landscape, right? With Microsoft providing the tools, the horizontal technology, and then the mid-sized companies providing their applications on top. And I think that is something we will definitely see in the future. And each mid-sized company is not able to develop all the capabilities and skills, need to think about that, right? So I don't know how you think about that.
No, yeah, absolutely, Tim. I completely agree, as we discussed in the previous parts of these episodes, right? The opening episode for the year. I recall being at Heart of a Messi last year, 2025, and if you go to the huge AWS or Microsoft or even Google Cloud booths, you see there smaller booths within those large booths of these different small or kind of not so small industrial players, like, I don't know, for instance, Cognite. I remember seeing Cognite's booths, Litmus booth, right? Symphony AI booth also. Remember, so these are companies that are continuously, I'm continuously mentioning them, but they are really, really, really important for the space, right? But absolutely, and that translates into what you said, right? I mean, if you go to Azure, which is a Microsoft Cloud, or AWS, which is the Amazon Cloud Services, both have their manufacturing business unit, right? With the aim of becoming, as you say, this horizontal platform provider of not just the computing capabilities or the storage capabilities, but also the services that will allow these companies, right, mainly today, to use that services to leverage AI capabilities, right? So, and you rightly pointed out, right, that why is this happening? Why this partnership, collaboration, partnership ecosystem? Someone calls it also co-opetition, right? It's a hybrid model between cooperation and competition, because there are also competing players that are partnering, right? Between vendors, industrial software vendors that are partnering themselves. And this is mainly because, as you said, right, no single vendor can cover the full industrial technology stack anymore, right? So, so this is a no-brainer, right? If you want to succeed today, one of the reasons, or one of the, no, sorry, not the reasons, but one of the actions that you should take is go and partner, be part of a partnership ecosystem, technology vendor ecosystem, system integrator technology ecosystem as well. So yeah, definitely, that's something.
And this is also something that leads directly to the second say trend or pattern that we saw in the last year, right? It's about carve-outs. So something you see in a lot of mature industries, right? Carving out parts of the business where you see becomes a commodity or not future growth potential. But it's also something that increasingly happens in the industrial automation, but also in the industrial software space. So just because companies are redefining their core, companies are starting to focus and saying, okay, this is not part anymore of my growth story. So if you look, for example, ABB, the sale of the robotics division, that initially surprised a lot of people, right? Because you think overall robotics growth business, why do they sell that to SoftBank? But if you look deeper into that, it's also reflecting a little bit the trend that we discussed, right? In software, in robotics, you see a trend shifting towards mobile robotics, but you also see a shift towards software in robotics, right? And one thing maybe a lot of people have overseen is that the control software for the robotics will remain within ABB, right? And will go into the automation, process automation business. So basically, they sold the hardware of their business, right? Where they don't see the future for them. So another thing is like Honeywell, where you see the breakup of the conglomerate. As we've seen with Siemens already starting long time back, right? And at that time, there were a lot of criticism around Siemens giving up that traditional model. But as of today, one can say, even there is still criticism, it doesn't go far enough, right? But it showed already success in terms of focusing their efforts in building the digital industry business, right? And carving out other businesses. You see in the GE, Vinova, for example, sale of Prophecy, their MES to TPG. Boeing, the sale of their digital aviation platform to Thoma Bravo. At the end of the year, PTC selling their IoT business, basically, Windchill, Capware, also to TPG. Which I think is the next pattern, right? The one thing is large industrials are carving out their business. On the other side, you see what you saw also in other industries already, the receiving entity is quite often a private equity company. So I think two trends that relate to each other somehow.
Yeah, that definitely, and that was something that really, I mean, truth to be told, it didn't surprise me the sale of the ThinkWorks and the IIoT and the connectivity with Gateway, right? Businesses, PTC is having a focus on life cycle management products, application life cycle management, product life cycle management. So kind of connectivity and IIoT was not fitting into their strategy. That was something that was foreseen. The thing that really surprises me, and again, same as GE with their prophecy business, right? MES, Cara, Historian, was that they sold those businesses to private equity companies. I am not a guy who comes from the private equity world. It's more like the industrial world. I was hoping that, or I was expecting at some point that those businesses, which are very well, they have a large installed base worldwide. Prophecy, ThinkWorks, and Kepware were kind of were going to be acquired by probably a competitor of theirs, not a private equity. So probably here I have a question for you, Tim. Why do you think? Probably this is not new, but certainly those two transactions last year were kind of massive for the industrial community, kind of big ones. Why do you think private equity firms are today interested in acquiring industrial software or industrial automation businesses?
It's, I think, two things. I think one thing you already mentioned, it's they have an installed base, right? And that makes that business predictable in a way, right? So this is always one thing. Private equity, other than venture capital, tend to invest into more mature business and into predictable and stable business. On that, they can build business on top, right? And what is better than an installed base of an established company? That is one thing. And the other thing is, I think it's not new that private equity is investing in software. In the past, you saw basically the investments into enterprise software, other software areas, right? But as those are reaching more and more maturity, I think there is clear that there needs to be new fields, actually, and fantasy for investments. And I think especially in the US in the last couple of years, you increasingly saw the interest in either private equity itself or private equity-backed companies, also from enterprise software, right? Acquiring industrial software businesses, reflecting this conversions. But I think the markets, if you look, are highly fragmented markets where you can establish buy and build strategies. There are mature businesses or segments that need transformation, like we discussed. So for example, the MES field is a great example for that, right? And I was already years back thinking, why doesn't more companies focus on that, right? Because even if it's very mature, it's still a highly fragmented industry segment in the industrial software space, right? So I think it's this combination, right? Having a predictable business in a way, even considering what we discussed in the last episode with industrial AI, for sure, creating also discussions in that space at the moment, yeah. And you have this highly fragmented landscape of players, so that makes it a logical consequence of someone, be it a strategic player or a private equity player, starting a consolidation in that area. And I think what makes it more interesting in the future, I think in the last episode we discussed what is defendable also in terms of AI, right? And if you think about verticals, about domain knowledge and so on, I think there will be more and more private equity companies thinking in that direction, because this is the areas, if you define a profile of a software company that basically has a defendable strategy in terms of AI or risk of disruption, I think it belongs to many industrial software players, right?
Yeah, that's right.
Yeah, please go ahead.
No, I was going to say, please finish your thoughts, and I have a question related.
Okay, and then the second market, what you also asked about industrial automation, and I think this is a typical field, right? It's a mature business. You have a lot of company successions, right? And this is something, for example, in the German market that we saw, is one of the key topics or key technology areas. Now I'm already talking about trend number 4, but industrial automation is a key area. You also here you have the chance to do some buy and build strategies, creating bigger companies, integrating companies with different technologies, but mature businesses, companies that are in the area where owners think about succession that can't often be found anymore within the family. So external solutions are here. So especially in topics that we discussed in the last one or in the first episode with edge intelligence, right? A lot of acquisitions in the last year was around visual inspection technology, measurement methodology, metrology measurement. So these are fields that are made for buy and build strategies that are more mature businesses. So also there, I think typical fields for private equity to invest, and these are the patterns that you currently can see, right?
Yeah, right. No, that's great explanation, and again, this is a kind of a learning experience for me, right? So appreciate that. So I have a related question on that. You
Sure.
mentioned the U.S., right? So
Yeah.
I can imagine which would be the answer for this question, but I would like to ask you anyway, right? So do you see major or big differences between the US and the European market, and particularly the German market, when it comes to private equity or private equity-backed firms acquiring industrial software or industrial automation companies?
Yes, there's big differences, and I hope that will change. Basically, what you see is I can't talk so much about the US market in terms of what is acquired, right? So in depth, I'm pretty much more into Europe. But in terms of acquirers, I think that there is no difference. So if you look in the major acquisitions, also industrial software, let's take the example Germany in the last year, it's basically driven by international, say, US private equity firms, right? So you very rarely at the moment see German mid-sized private equity companies, even those that are investing in software, investing in the industrial software space. But just what I said a minute before, I would expect that to change because I think the structure of that segments are well favorable for private equity investments, right? You, in terms of fragmentation, in terms of age of companies, you have successions coming also in that field. And also saying what I said, those are segments where you find interesting profiles in terms of verticals, in terms of domain knowledge, and so on. So I would assume those companies monitoring, observing what US companies are doing would have their following their examples from German private equity companies. Yeah, but you can see it, but rarely. So it's a lot of international acquisitions anyway. In for example in Germany, also from strategic investors, right? It's also more international companies acquiring German industrial software companies than national players. So, but I expect that to change a little bit.
A little bit in the future. Okay, that's great. So, Tim, remember at the beginning of the episode, you said you were focusing, at least this first part of the episode, on 5 key trends. You talked about partnerships and collaborations. You talked about carve-outs. You talked about also the private equity and private equity-backed firms acquiring these industrial software companies. Now, a huge trend, which is, I guess you consider it for this discussion, was particularly the industrial automation and robotics companies, right? So
Exactly.
what did you see in 2025 regarding this space in terms of mergers and acquisitions?
Yeah, I mean, I think I already touched it a little bit when we talked about private equity, right? So it's two parts. So one is really if you think about industrial automation itself, you see, I saw especially those trends that I discussed, right? There is a lot about sensor technology, hardware consolidation, if you want, right? Visual inspection technologies, measurement technologies. So this is really the key areas where you saw the transactions happening in the last year for different reasons. I mean, a lot of them, as I said, private equity driven, right? Some in the area with a key driver of company successions. But you also saw investments in terms of growth capital. So for international expansion, because a lot of industrial automation vendors are like mid-sized players, and I think if you want to grow, for many of those companies, it's about international expansion, right? So this is I think one part of it, and the other, which we touched already in the last part also a little bit, and also with the ABB transaction, is the robotics space, right? And that relates and resonates a lot with the trend that we discussed with in the first episode. In robotics, you see this shift from stationary robotics to mobile robotics, right? And also when we talk about edge intelligence, about robotic software, right? So a lot of value is, you see, shifting in the robotic space, and value creation from the hardware to the software, like in the overall automation space. So these are some underlying factors where you see trends here. And there is a couple of companies in the market that are basically private equity backed, like Agile Robots, like Neura Robotics here in Germany and Europe. Private equity backed companies that are acquiring specifically in the autonomous robotics space, in the software space. So this is another trend. But also, if you look at the Siemens acquisition acquiring ABM Pabst, right, the drive technology, that also pays into the mobile robotic space at the end, right? It was a missing piece for Siemens in terms of the drive technology to complete that portfolio. So that's I think the trends, I would say, in industrial automation, right? If you separate it into those parts. And also here, you see private equity also as a key driver or enabler of doing those kind of transformational or buy and build strategies. So, yeah, and then...
Yeah, and one, I guess from my humble perspective, right? Thanks, Tim, for all those key insights. But from my humble perspective, another key, let's say, M&A trend in 2025 was all the mergers and acquisitions around software and AI, right? And large automation vendors, for instance,
Sure.
buying software companies to either complete their portfolio or to accelerate their own transformation from a business strategy standpoint, right? And I can cite here, for instance, two big ones: Siemens acquiring Altair. That was a huge Hannover Messe 2025 announcement, around $10 billion, that acquisition. And also Emerson completing the AspenTech acquisition, right? It was approximately $17 billion. So from an M&A in the software and AI landscape standpoint, those two acquisitions resonated in the industrial software space a lot. So can you provide any trends, any additional trends or facts that happened around M&A in the software or AI landscape in 2025?
Sure. I can. And the two examples you brought are basically, I think, two, let's say, symbolic or representative transactions. I think once for the M&A, But the other, I think, also what we discussed in the last episodes or the last parts is really, let's say, making the bets on the software field, right? So because you as you already said, those were two big transactions, very large transactions. And I think this resonates also one trend in the last year that you could see, that the return of the large transactions. Because if you look at the overall software, but also industrial software space, there hasn't been so much movement, depending on the subsegment, right? But not so much movement in terms of, or growth in terms of the number of transactions. But you saw a significant increase in terms of transaction value, right? So, and that was really driven by the return of large transactions like Siemens Altair, Amazon acquisition or completion that you discussed. So in that case, they were representative. We saw large transactions. The Siemens acquisition representative of Altair in another area. There was a lot of discussions around, did they overpay? Is the price too high for the acquisition? But if you looked at all the rationales also that Siemens provided around the acquisition, that already actually covered also the AI rationale behind that acquisition, right? And this resonates with a lot of acquisitions that you saw. Maybe from the last episode, you would have expected more M&A, let's say, directly driven by industrial AI, but a lot of software acquisitions you saw were software companies with at least a huge stake in AI augmentation, right? Like in adopting or adding AI features, intelligence around their portfolios, if not AI native, right? So AI also is driving, you can say, the software acquisitions if you look at Siemens, right? And I think the Altair acquisition is also representative for a third part, is really, if you look at one area where you saw an increase also globally in terms of transaction, is the whole engineering space, especially around simulation software. So that is one trend that you really could have seen in the last year, that there were a lot of acquisitions around that, right? Also the wider area, if you look at engineering PLM. So yeah, just giving one example in Germany. So also resonating to the trend, hardware is buying software, like Keyence, for example, the international, the industrial automation player from Japan. They acquired Cadinas, a German PLM company. So you see a lot of logics or a lot of examples in this one Siemens acquisitions that is reflecting overall market trends, right? And for sure, like this logic, hardware is buying software driven by the large industrial automation vendors, that I think will also trend in the future, because I think that's the only way companies with originary hardware-driven business models will be able to catch up and build up digital capabilities. I mean, like we discussed in the first episode, right? If you seriously think about topics like software-defined automation and so on, and decoupling hardware-software logic, you have to think about how you build up the software capabilities. So, yeah. So I think that is a key area. Supply chain management, you saw a reasonable amount of transactions. Aption, for example, company very active last year with 6 acquisitions overall. And I think, yeah, you need also, I just touched it, to talk a little bit about the AI part of that, right? So if you look purely AI, as you would expect, given the maturity, the majority of industrial AI, let's say native companies, I don't know, I don't find a better word on that or explanation, is still pretty much venture capital driven, right? And if you look on a global basis, you can see a significant increase in value in terms of industrial AI investments in venture capital. And on a global basis, also a slight increase in number of financing rounds, right? Interestingly, if you look at Germany, you also see significant increase in value, but even a decrease in terms of number of transactions last year. That was also when I looked on that figures for not talking over AI in general, but industrial AI, right? What you would allocate to that area. There was even a decrease in numbers of rounds. So so you see that there's actually would say less rounds into later stage companies, right? Interestingly, and not a good message if you are here in Europe, but reflecting, I think, the overall investment landscape, right? If you look from where the investments have happened, 68% of overall venture capital deals that were AI related were in the US. So that's a huge share, right? And this is, I think, something in especially in Europe where there needs to be thoughts on how to catch up with that, right? Either you need, let's say, smarter types of investments you can do, because I think you can't immediately increase the volume or the funds you have here in Europe, right, in terms of investments. But I think there are other ways. If you look, for example, at manufacturing companies, if how they have to transform their way into the future, and how they invest today, many of them still invest in direct competition, into economies of scale, into market share gains. So one could question whether that is the right model for the future, and whether there should also be a shift towards investments into software capabilities. So that could be something that could actually, I mean, not in full for sure, if you look at large private equity funds in the US or venture capital funds, but maybe you need to find smart ways to deal with that, right? Or alternative investment structures. So, but that was really interesting to see, like, how much advantage or how much more investments are happening in the US, right? So, I mean, you for sure would have thought about that, but that the difference is, or the distance is that big, right? Because that also includes China in the remaining 32%, right? So that is really astonishing.
Well, yeah, I would say that an easy explanation for that is that it could be that, well, that there's a huge number of startups that are being created in the US year after year, right? So it's a kind of, I think it's part of their culture, right? You know, entrepreneurial culture, right? They have the VC firms there. Also, a lot of VC firms are based in the US. They have the whole environment is prepared for these startups. I wouldn't say to succeed, but at least to get the necessary funds, right, to start, those businesses. So yeah, I think the easy answer for that could be there's a cultural thing behind it, right? You know, the entrepreneurial probably, correct me if I am wrong, Tim, please. Typically, probably in Europe and some countries like Germany, probably they tend to be more conservative. You know, they rely more on traditional technologies, right? Traditional automation technologies. Probably the innovation. I'm not saying, please don't get me wrong. I'm not saying that in German you don't innovate, but probably. As I said, right, the environment is more, there's an environment already set up to fuel that innovation, which is more developed in the US rather than any other part of the world. I don't know if you agree with that.
Yes and no. So okay. I agree in terms of if we talk about horizontal technology capabilities, fully agree. Yeah, so I think the capabilities around AI in general is not matched anywhere else. I think, especially in the breadth, I would say even not in China, right? and number of companies and also the investment potential behind. If I consider what we discussed in the 2 episodes before, I would think, and this is what I said, we need to in other parts of the world, especially in Europe, we need to leverage that in a clever way, right? We have I think, significantly superior know-how and capability in terms of manufacturing, in terms of industrial automation, also players in the market, right? You have a huge number of traditional industrial software companies. And if you take that as a basis, saying industrial AI is differentiating from enterprise AI or horizontal large language models, then I think it doesn't need too much fantasy saying there is a let's say not a financial capabilities and assets, but in terms of knowledge, right? And you need to leverage that. So I think if you think about innovation, yes, as I said, like in terms of horizontal capabilities and know-how, fully agree. If we look at domain and vertical know-how, I would say no. So, but the question is really, and I think the discussions here in Germany and Europe are circling around that since the invention of the phrase Industry 4.0, right? But at a certain point of time, you need to start capitalizing on that, right? But let's see. And I think M&A could be definitely a way of driving that, right?
Absolutely. And again, from my analyst perspective, that is at least in the US, I witness it's happening a lot, and it's one of the drivers of in AI, particularly industrial software, in some specific use cases, as you said, like MES, supply chain management. Also, a very important industry to watch is the augmented connected worker industry. Yeah. In those particular industries, a lot of M&A movement, mainly companies acquiring competitors, I would say. So definitely it's one of the drivers of industrial software growth over the last, I would say, at least post-pandemic, right? So yeah, definitely.
Yeah. But I fully agree with you. I mean, I'm reflecting that. Yeah, I would say more, let's say, innovative, also manufacturing technologies probably come from the US, right? And we need to really start leveraging the heritage we have in manufacturing, right? But somehow we need to start. So,
absolutely. And just one thing that it came to my mind, and probably before moving forward to the next step, which is, to the next topic, which is the what to expect for 2026, right? We were pretty much focused in this discussion around industrial automation, robotics, software and AI companies, but I would like to mention that also the OT cybersecurity space is really strong and very prominent in M&A deals. A few months ago, we had this massive acquisition of Mitsubishi Electric acquiring Nozomi Networks, one of the most important OT cybersecurity companies out there. So apart from software, AI, and of course industrial automation and robotics, the OT cybersecurity space, is seeing movement around mergers acquisitions, and impactful companies being involved, right? So that's a nice space.
I think you could expect that also to increase, right? Because once the stacks are more and more integrated, I think cybersecurity especially is a key area to address, right?
And for the fourth consecutive year, manufacturing was the number one targeted industry by ransomware attacks and cyber attacks in the world. Fourth consecutive year, 2025. So it was 22, 23, 24, 25. So you can expect also, Tim, and of course the audience, pretty much movement around M&A movement around acquisitions or around OT cybersecurity companies.
Yeah, and I mean, if you already touched the topic, like with the outlook for 2026, so I think what I'm not going to do is a prediction on how M&A market is developing, because typically every year end and every beginning of the year, you can basically copy paste the predictions on the market that now it's really taking off. So I won't do that because I don't have the crystal ball, unfortunately. But I think beyond that, what you can always do is, and there are always transactions. Yeah? So, and the thing is really, what would be the driving logics in the industrial software space that I would expect? And these are a couple of trends. I think we already touched the discussions around software and AI, and at the moment there is a lot of discussions, like we touched in part 2 on industrial AI, right? Is software, industrial AI eating SaaS or whatever, right? And you have this, if you look at that, I mean, I wasn't aware of that. I just picked a number before the podcast, that this whole discussion and the whole fear of investors around that topic has already led to a $280 billion market value destroyed on publicly listed software vendors, right? So this topic is really, I think, shaping the discussions. Whether it's correct or not is one part, but nevertheless, once the topic is addressed, right, at least at the moment, it's creating a lot of turbulence in the whole software field, because beyond publicly listed companies, private equity companies start to think about their the value of their portfolio companies and so on. Start think about, what do I acquire going forward. So this topic is set. Not saying companies will only buy in the future AI companies, but it will definitely on the short term have impact on the valuations. And for companies on the other part, or on the other side, or on the other perspective, they will have to consider that going forward. Meaning, especially in industrial software, you have the situation, AI, you need to build in your technology platform. You have a lot of companies in Germany, but I think also across Europe, that have been founded at a time where owners now have to gradually start thinking about company succession, and that in a phase where you would need to transition or to invest into your technology to modernize. So I would assume, if I would be an owner of a company, I would think twice. Do I do that alone, or do I do it with a partner, having at least a part of the value from the company in my pockets, put it that way, right? So having someone investing and helping to transition the company. So I think this combination of need to invest, need to modernize, with what am I doing in the next couple of years in terms of a company succession, I think will lead to more transaction in the transactions in the software field, industrial software field. Also, like with the drivers that we already have touched, like we are talking about fragmented markets, that on the other side, typically there will be buyers seeing that setting and seeing the logic of a buy and build strategy in that area, right? So I think, put it that way, sell side pressure, I think, is increasing, especially in the software field. Impact of AI on transactions, what I just said, you could expect. I think private equity going forward, I would assume having more interest following the global example, also in other regions, like where it's maybe not that common at that stage, like in Germany, for example. And one topic we haven't touched, and that might be an interesting part also for our next Industrial Tech Quarterly, is in all that environment, I think you will have the need for system integration capabilities, right? There is, some of the large players like Accenture that always run in front with acquisitions, also in the PLM area, like in Germany in the last year, acquiring MES capabilities and so on. But I think especially if you look this convergence of IT and OT, I think that also needs to be reflected in terms of system integration capabilities, right? So if you say the shop floor and executive floor are growing together in terms of software solutions, right? Somehow that also, I think, needs to resonate in the integration capabilities. So I would assume, and there is one example in Germany with Bechtle, right? So like system house, system integrator here in Germany, they already since I think almost like 10 years have started to acquire, especially in the area of engineering and PLM software companies, right? So I would expect also more to happen in that area, because you have a lot of interesting companies in that field, like with individual software development companies on customized software solutions for shop floor, IT, OT system integrators, really knowing how to integrate those different technologies and data points and PLM software, MES software, and so on. So I would expect also more to happen in that field. Yeah.
Yeah, absolutely. Well, and again, this could be a really, really good topic for our next episode, team. A lot of things to be said here. What I can contribute here regarding this topic is that, same as, and I'm not talking AI yet, right? But this IT-OT convergence and the kind of Industry 4.0 trend that started 10, 15 years ago, saw the inception of traditional IT system integrators, right? And I'm not talking just about the consultants firms like Accenture, for instance, or Deloitte, but like the Capgeminis of the world, data consulting services, those kind of companies, starting, being, expanding their scope of integration capabilities to the shop floor, right? So today it's a very interesting space where you see the traditional OT players, right? Then the traditional OT system integrator players, right? The traditional IT system integrator players, and then these consultancy firms like Accenture, all trying to, expand their original capabilities into the other layer, I would say, right?
Yeah,
so
exactly. Yeah.
Typically you've had these IT system integration companies that they're from an operational standpoint, their main business was integrating ERP system to MES systems, for instance. Then you see these traditional OT companies, that OT system integrator companies, that always their domain of expertise, I would say, were the control system layer and also the optimization layer, where an MES probably was lived, let's say in that way. So now with this IT-OT conversion, you will see more OT players trying to integrate with ERP systems, and then more IT system integrator players trying to integrate with OT technologies, right? And that's where I believe these consultancy firms like Accenture, like Deloitte, even I learned 2 weeks ago that PwC also starting to participate in this type of IT-OT convergence system integration projects. So that's where these type of companies are kind of leading the pack today, right? So because they have the resources, they have the capabilities, they have the size, the budget, right, to do so. One clear example of this could be in Hannover Messe 2025, Siemens announcing their partnership with Accenture, right? Yeah. Training 7,000 of their employees to integrate with, to train them in Siemens technologies, right? So that's a very, 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 and I didn't mention AI yet. Imagine with the AI. So sure. Disrupting also that space, and also I foresee here, and I agree with you, M&A activities in this space shortly, right, soon. So that's a very interesting topic to probably discuss in the next episode, right?
So let's take this as our next deep dive in the next quarterly.
Absolutely.
Yeah, but to round up this topic, I think what is important to as a takeaway. So I think M&A in industrial tech and industrial software will or needs to be a key part of the strategy of any player in that market. Once on a buy-side perspective of companies entering the industrial software, industrial tech space, because first of all, you can't develop everything by your own. Second, the innovation cycles are so short, resources scarce. So I think acquiring is in many ways the only alternative. But also on the other side, I think what we also said is looking at the need for investment transformation in the technology itself. So I think we will see more and more smaller companies seeing M&A as a way to integrate with either a larger strategic investor, leveraging or helping to modernize technologies. For example, with players that have interesting installed base, interesting vertical that complements with a large player, and so on. Or alternatively within private equity player. Yeah, but I think there are more and more companies that will have to consider that way, and I think beyond all the growth players where we see this already established, also smaller players that actually decide to go the way forward on a standalone basis will have to think about cooperations, partnerships. And I think not only in the technology area, but also what we just discussed, also in terms of system integrators and integration capabilities, right? Because the only way to scale your business is to partner on that. And there you also see more and more the trend towards a clear profile, like business model, either software or integration capabilities, system integrator capabilities, right? So I think, that's the third way, right? So if you decide to do that on your own and be in that area, you need technology partnerships, and you need partnerships with with system integrators. So
absolutely.
So I think that is the key takeaway also for companies out of that episode.
Yeah, and that's I think you depicted a really good outlook for 2026, even though it's not my area of expertise. From when you talked about the industrial automation or robotics trends or software and AI trends on even the system integrator capabilities, I agree with many of your statements. So it's going to be an exciting year. In 2026 is going to be an exciting year for M&A activity for sure.
Definitely. In that way, Sebastian, it was great doing the 3 episodes with you and refreshing the podcast, and really looking forward to have our next quarterly.
Absolutely. And again, it's my pleasure, Tim. Thanks for having me. And I really enjoy, having these discussions and also sharing our experiences, right, with the audience, right? That's something that I think we both love. So thank you for giving me this opportunity.
Yeah. So thanks a lot, and talk to you soon.
Till next episode.
Bye-bye.
Transforming industries.